Hey there, and welcome to my channel, The Paper Bag Investor. Today's video, I'm going to look at my Lemonade 5-year projected target for Lemonade. And with each time I've done this 5-year projection a couple times now. With each time I do it, I'm refining it a little bit more, adding more detail to it. I've fleshed out and refined some of the reinsurance details and how that could look currently as their reinsurance business is set up, or if their business was sort of removed or phased out the reinsurance over time, which I think long term is what they will end up doing. And I think this will help you decide, is Lemonade a hyped up growth stock that's overhyped, way too expensive, or is it still a really good quality company that has still reasonably priced and still has lots of room to grow and is a great investment even at today's prices. So this should help you figure that out better for yourself. So let's get into it. Before I go any further, just want to make it absolutely clear, not a personal financial advisor, just a guy with a paper bag on his head who loves investing, loves thinking about the future. And if you love investing, you love thinking about the future, you get value out of this, subscribe. I think you're going to love the future content I put out as well then. Okay, Lemonade 5-year projected value. And we have here their gross earned premium we're starting off with, projecting that out. So we have for different years here some history, and then in millions of dollars what they are projecting. So for 2021, 275 million, and then and they've kind of gone from 25 million in 2018. Gross earned premium is the amount your earned premium. Premium is basically insurance premiums that are paid in, but you recognize them, or you convert them into gross earned premium after they expire. So, if you buy renter's insurance for a year, after that year period is completed, then it turns into a gross earned premium. So it's going to be less than what they've also put in a lot of their quarterly reports, which is in-force premium, which would be the total amount in force. So gross earned premium would typically kind of be trailing your in-force premium if the company is growing. There's kind of the year-over-year growth rate for those. And I bumped these up a little bit because from my previous video, because I realized that in their conference call, they said for this year, 2021, their projected gross earned premium, 275 million or about that. It did not include new products that could be coming out this year. And I think they're going to be releasing their auto insurance this year. So this could be a little bit higher. I bumped up these numbers a little bit, and then sort of projecting out what this could look like. Of course, they were growing faster than that, but it's typical as a company, you can still exponentially grow in your quantity, but even though your year-over-year growth is declining, that's pretty normal, typical. So I had about $2 billion in my last video. This I'm averaging out by 2025, maybe $2.2 billion in gross earned premium. Now, the reinsurance, I've added this onto this video. Here's how your reinsurance works. Reinsurance, they take about 75% of your gross earned premium, but then they give back 25% of that 75% to Lemonade. So it works out to, you do the math there, it's 50% of the gross earned premium goes to the reinsurers. Now this 25% that goes back is basically like your operations fee that Lemonade takes. They take that back. So it works out to 56% of this gross earned premium goes to the reinsurers, and 44% goes to Lemonade. So you break down your 2025 numbers, for example. Here's your kind of 1.2 and 970 million dollars going to reinsurers and going to Lemonade. Now the losses, though, insurance losses, you take basically your gross loss ratio. I'm projecting they average out to about 70%. Gross loss ratio, so you're just multiplying your gross earned premiums by 70% and you get your losses. But 75% of those losses are covered by the reinsurers, 25% are covered by Lemonade. These are kind of rough numbers. They're slightly off because about 2.5%, I should mention, of your gross earned premium goes to kind of a catastrophic event insurance. But I haven't included that, so that would kind of be on top of these growth rates, 2.5% extra. That's just going to be, you're not even seeing in these numbers, to make it a little bit simpler for us to understand. But again, 75%. So the reinsurers are collecting 56% and they are covering the losses for 75%. So it works out to, if this was about 73%, then it gets pretty close to that. You get basically your, that's kind of your break-even point for your reinsurers. So anything that's 73% or better for your gross loss ratio is the insurers, your reinsurers are going to be happy. So that's kind of their targeted amount, 73%. So I'm putting 70%. It could be lower than this, but that's kind of what I'm estimating. And then their operating costs, I had this in my last video, but they were rising out of 120 million to 146 million, 22% increase. So I've just scaled that out for 5 years, 22% a year gets you about almost $400 million in operating costs for Lemonade by 2025. So your operating income, if you take without reinsurance, I'm doing kind of both sides. And with reinsurance included in the model, two different scenarios. Your operating income if there's zero reinsurance, so no reinsurance at all, would be about $266 million for Lemonade. And with reinsurance, which is how they actually operate, though that could change by 2025. That could be slightly restructured. It's going to be about $189 million. So a fair bit lower, but not drastically lower, but a fair bit lower. And then net income, I'm doing about 21% tax rate, corporate tax rate. So on both sides, again, you have about 210 million and 149 million there after you remove your taxes. So 149 million or 210 million. Now your PE, say you have a PE, I'm just for example now, we're going to discuss this in a little more detail, but I'm putting in 50 as the PE ratio here. If now your market cap, you multiply just your net income here by your PE ratio, price to earnings ratio of 50, if that's what the market gives them. It's very high. That's a relatively high PE ratio relative to what stable sort of normal companies would be, maybe like 10, 20, 30 even would be high PE. Unless depends on how fast the market sees them growing. But so 50 I'm putting in, we get you a 10.5 billion market cap. 7.5 billion market cap here. Currently, they're at about 5.3. So if there was no reinsurance and everything was covered by Lemonade, which is I don't think would entirely be the case in 2025. I think that could take years and years for that to really fully phase out because they have so much growth ahead of them. But then they have about a doubling, basically doubling their market cap for a 14% compound annual growth rate over the next 5 years. Yeah, this would be like a full year of 2025, so like to the end of 2025. Okay, and on the reinsurance side, which is I think more realistic to today, it's about 1.4x and 7% growth. Really not that good. I would not be happy with that if that's all it did was 7% over the next number of years. But I think most of this is pretty accurate. But the one thing I would say currently in here, and the one thing you can really debate more, is what this PE ratio should be. I'm thinking, because of their global ambitions, because they want to make, because of the qualities, I should say, just of the company itself, that are, and the level of detailed thinking and I think strategy they have, I think this number could be higher, because basically this number is a function of how much growth ahead of them could they still have. Well, of course, if they're only doing like 2.2 billion in gross earned premium, they could have tons of growth ahead of them still. They could do hundreds of billions of dollars in gross earned premium. So this number, there's tons of growth still scaled ahead. So this number should probably be higher than 50. It also depends sort of the confidence the market has in that company. So the more confident they are that they're going to grow into that sort of future valuation, the more likely, the higher and higher multiple the market's going to give them. Honestly, Tesla, like they were not profitable, and then they've had had PEs over 1,000. Amazon had a PE over 1,000, like in 2013 and around there. And so there's companies like Square that have like I think it's like a 400 or 500 multiple right now. They were like a 200 multiple. Can obviously fluctuate on how profitable the company is quite a bit at that point. But I think 50 is probably low. I'd be honest. I think I would probably say more like 100 is probably more realistic. So I'm going to type in 100 and then kind of go with that as my estimate or my prediction if I had to sort of choose. And so that makes obviously a massive difference. You suddenly now are at a almost $15 billion valuation here. And if you phased out reinsurance, you're kind of looking at a $21 billion, which is like a 31% growth rate, 3.9x over 5 years. Or in this reinsurance side, again, you're at that like 23%, which is, to me, that's outstanding. Anything 15% or higher to me is great. 20% or higher, absolutely astounding, or awesome. And if I can get 25, even 30%, like I think Tesla is still going to grow 30% for the next 10 years, and maybe even beyond that. that's fantastic. But to have 23%, that's still really, really good. 2.8x, almost tripling in the next 5 years. And to me, that seems pretty realistic. So that sort of that $15 billion market cap. They're just around a little bit over 15 billion market cap in 5 years time. To me, I think if I had to pick a number, that's what I would go with. So there you have it. That's kind of my most nuanced and refined Lemonade projection so far, and I will be continuing to update, refine, and track this model over time with Lemonade. So if that all interests you and you got value out of this, make sure you subscribe for more content like this. Let me know in the comments down below what you thought of this video, and what you think about Lemonade. Love to hear from you guys. Hit that thumbs up while you're at it. Really helps me out. And remember, it's in the bag. I'll see you in my next video. Cheers.